Welcome back to the Eric Krown crypto channel, wishing you a happy healthy start to this like boring Tuesday, baby. It's another boring Tuesday. It's been a boring last couple months, basically, and I suspect that it's going to continue as well. So there goes your YouTube clickbait title or thumbnail, whatever the hell that it is. Although I did want to update on the timing of when I expect this range to essentially resolve, and then how the higher term time frame momentum pivots are starting to switch around and provide a little bit more of an insight as to what to expect. Other than that, still looking sometime around early next week, I suspect. And of course, I do want to give another warning to the community that we do intend to raise the price of the quant program simply because we're going to be adding more value to it. We're going to add, well, of course, more videos, but more importantly, we're going to be adding a Discord channel where people who actually have it can ask questions and congregate and whatnot. So I suspect that that will be done in early November. And without further ado, let's just jump right into it right now. So I wanted to start off this analysis with a little bit of hopium. Now, I want to highlight the word hopium here, that this is really secondary to the primary analysis of Bitcoin itself, but what we're looking at is we're looking at a chart of the volatility indicators on DXY, the dollar index. In this case, we are officially starting to see the second extreme reads on volatility go into a contraction phase. So typically when you see something like that, you're going to see a counter trend move, whether that's a counter trend move that's just, in this case, a pullback or reversal. That's not what this implies, just, a counter trend move. So likely a pullback, assuming that this next closure maintains this sort of curvature where the BBWP indicator is showing a decline in volatility from a close over closure basis. Anyways, what else do we have as far as DXY goes? Well, we do have 1, 2, 3, 4 drives of bearish divergence on weekly RSI. And we also do have actually the weekly jewel is starting to give a signal here. I still want to see the the purple get a bit more of a downward slope, but for more aggressive people, this will basically be enough. And so with all of those things in mind, and also not even counting that last week did print a bearish engulfing right here, probably time for a bit of a pullback. Assuming that does hold to fruition. Short-term range lows at about 110 and 10 cents or so. Anywhere below there, especially on a weekly closing basis, does confirm this as a local high, and that's at the point where things get a lot more fun. Very likely targets down somewhere into the 107 to 105 region, let's say, in the following couple months, if that were to happen. Now, why is this hopium? Because DXY typically plays opposite of risk on assets on the higher term time frame trend. Has absolutely nothing to do, in my experience, with the lower term time frame trends. Like if you're on a fucking 5 minute and you're looking at like, oh, DXY's pulling back now, so Bitcoin should go up. Like it's probably not going to work. Also, unless you're like paying for updated data feeds on DXY itself, it's definitely not going to work because it's on a delay. Anyways, let's now go into the heart of this analysis. I wanted to once again follow up on the timing analysis of Bitcoin here as it starts to really fill out this, what would be lower high structure, which is in the format of a descending triangle. So you can see the last few highs coming in from basically the summer highs in August at about about $25,000. Then more recently in September, and then a few more tests over here in this month of October. We could even pull this a little bit further back out if we really want to play with that. I'm not a humongous fan of diagonal trend lines in general, but I did, in this case, we're kind of just reaching for straws right now as far as things to talk about. The bottom boundary is very well defined in this case, back around about 18,350 if you want to do it on a daily closing basis, or just any sort of a wick tick below. Was this last week's low? No, this was 2 weeks ago low now, which was on CME, very specifically 17,800. So in this case, whenever we do have a formation like this, it can give us a little bit of a bias on when to expect the actual major move, if you will. And naturally, there's going to be an apex coming in here, basically at a little bit after the end of the first week of November. So this is about 2 weeks away. Typically, you don't see things actually, make a decision literally at the apex. You see it like a little bit before. Usually, it's about 70 to 75%. When it's about 75 to 75% full with towards that apex, it's very, very likely to break. In this case, you can see that we're already there. And so realistically, if it hasn't broken by then, you're probably going to wedge yourself into a region like this. And at that point, very likely to break. So that'd put us into the first week of November, maybe, or is it this week or next week? basically between this coming Friday and the Friday after that is where I'd say we have a high probability to actually see this one break, because it is a triangle in this case, which I'm, by the way, if you're new on this channel, I typically don't like patterns like at all. In that case, really the only patterns that I do care about are descending and ascending triangles, because they just come back down to trend. But we can get a measured move on top of this, which I thought was interesting. So let's just talk about what if it does, break out to the upside. Obviously, descending triangles, being that they are, a lower high trend, has a higher probability to break out to the downside. But if it were to break out to the upside, which would be denoted by a daily closure above about, in this case, I'd really want to see it close above about 20,500, to be honest with you. But it would be implying a move back up towards about 23,500 bucks or so, with potential for more. To the downside, a lot more easy, because a lot of the times in these cases where it is a descending triangle, any sort of upside break is typically going to be a trap. But to the downside, a lot more easy in this case. We could see likely a move down to about 15,500 bucks in alignment with the 1.618 Fibonacci extension here from that prior base. So I do like that, again, if the downside conditions are met. Now, before we go into the statistical analysis, let's just briefly go through the lower time frame analysis. It's the same ranges as yesterday, basically, looking at about 19,000, basically 19,800 to the upside versus, if you're on very short-term time frames, like 18,900 and basically 19,000 bucks to the downside as well on the short-term time frames. A break above the top side, probably looking at a move somewhere around that 20,500 pivot, a break to the bottom side, and probably looking at another move somewhere within the vicinity of this blue box territory. Which obviously gives it a much more, which has much more potential dire consequences, as that could lead into a macro breakdown. But still, the conditions for that, daily close below 18,350 now. And yes, I have moved that number up a little bit. Sweet. So now that we've gone through that, a few things of interest here on the lower term time frames. BBWP extremely low still, 6-hour time frame. BBWP extremely low, 12-hour. Daily, 2-day, 5-day, weekly, all coming off of extreme lows here. So we're looking at a macro move, probably in that early, in this next 10-day sprint here. We're looking at 30 to 50% move, most likely. Big move, big move. On top of that, 6-hour time frame still has potential hidden bearish divergence in play between this point, this local high that we saw back one over here, and this potential one over here. Not confirmed, however, until Bitcoin closes below about 19,000, a little bit above 19,000 bucks, and then yes, that would do it. Now going into lower term time frame stochastic momentum, this is where I think things become a lot more interesting. On CME, closures below 19,279 and 12-hour time frame will turn down, also kind of fulfilling a bit of a trend line regression here as well. Not perfect, but is in there. 6-hour time frame also going to be ticking down, I do believe, with any sort of a closure below 19,311. So as long as Bitcoin's above there, remains to the upside. If it does close below, then obviously turns to the downside. 4-hour time frame is going to be down as long as Bitcoin's below 19,360. 3-hour time frame is also going to be down as long as Bitcoin's below 19,500, and hourly is going to be down as long as Bitcoin's below 19,325. So all of these are very, very close to current price action. Does provide a little bit of a short-term downside bias, which is kind of the same thing that I was saying yesterday, but we're talking about very short-term time frame ranges here. I don't think that this is going to be the move that actually breaks shit just yet. The thing that I am most interested in, as always, is going to be the daily CME analysis over here, simply because it gives us a probabilistic way to be looking at price, and also has great influence with the other things that we looked at as well. Anyways, this signal is, you already fucking know it, repeat after me, everyone. Daily volatility, which is represented by the BBWP indicator right here, versus stochastic momentum. In this case, daily BBWP, anytime that it gets below 10 percentile, I consider that extreme lows, and the expansion phase that follows after that for the full history of CME, going all the way back for the past 4 to 5 years now, has led to an average move of about 24.25%, done over the course of about 2.5 weeks on average. And the stochastic also has gotten the correct direction 83% of the time, basically, upon confirmation of volatility expansion. So that begs the question: what would you consider volatility expansion? 2 things. Daily BBWP must have a positive slope and above the moving average. And then 2, and also very important, daily BBWP must be above that critical zone at 10 percentile. If you get those two things, the signal is confirmed. Then we go reference the daily direction of stochastic momentum, and whichever direction that it's in has a high probability for big follow through. In this case, again, we still do not have volatility confirmation, which is the most important part. But for right now, just so that we have something to look at, the daily stochastic pivot is below 19,100. That is to say, as long as Bitcoin's closing above 19,100, still momentum to the upside, I suppose, but doesn't mean much without volatility expansion. If closed below 19,100, again, without volatility expansion means nothing, but probabilities once again shift onto the downside alongside trend, alongside rejections here, and this trend line regression, blah, 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 blah. You get where I'm going with this. Anyways, other than that, it's a long way of saying short term, probably sideways and down. Medium term, probably still overall sideways, and higher term timeframes, probably still sideways until, like, I would say this coming Friday to the Friday after that is probably when we're going to start to see things potentially break here. Cool. Anyways, that's a good place maybe leaving off. I probably should have mentioned that Bybit still has a promotion going on. They actually have 0% on fees for maker orders, not just for spot orders, which actually have 0% on both maker and taker, but on derivative contracts, which do have actually 0% fees on maker orders, with the link in the description below. Anyways, cool. Yeah, I think that's a good place, and we'll leave it off till tomorrow. Take care, much love, and see you hopefully soon.